are watching World Insight with me, Tian Wei. Still to come on our live program. The global ripple effects of the simmering trade tensions between China and the U.S. With the recent tariffs coming out, how bad can they get? Some answers after this break. Welcome back. You're still watching World Insight, coming to you live from Beijing on CGTN. I'm Tian Wei. The U.S. financial markets are flashing a warning sign of a recession, at least last week, and the global economy is weakening as the U.S.-China trade war drags on. In response to the U.S. latest additional 10% tariffs on $300 billion of Chinese goods, the Customs Tariff Commission of China's State Council announced recently the countermeasures. It plans to impose tariffs on over 5,000 products worth about $75 billion at rates of 5 to 10%. The measures will be in effect in two batches, one on September the 1st and the other December the 15th. Before we get down to our discussion about all the latest, take a look at this.
Buzz about an American recession is growing louder after Wall Street suffered its biggest day drop last week. According to the latest data released by IHS Markit, the U.S. Manufacturing Purchasing Managers Index dropped to 49.9 in August, flashing a sign of contraction for the first time since September 2009. Any indicator that's below the neutral 50 threshold is considered a warning of contraction. On August 13th, the Trump administration delayed planned tariffs on China. The U.S. president earlier announced an additional 10% tariff on $300 billion worth of Chinese goods. In a separate move, the U.S. Commerce Department accepted Chinese tech giant Huawei for another 90 days from the so-called entities list for national security reasons. Ran Chengfei, the founder and CEO of Huawei, said Tuesday he expected no relief from U.S. export curbs given the political climate in Washington, but expressed confidence in the company's bright future. On Friday, Huawei released its latest artificial intelligence chip, Ascend 910, and its matching open-source computing framework, MindSpore. The company says the new technology is part of its bid to expand into AI and semiconductors. While U.S. companies have long pleaded with the White House to stop the tit-for-tat tariff escalation, citing harm to consumers and their businesses, Mr. Trump has been undeterred. As the U.S. president counts on the economy to give him a second term in the White House, is the cost of the trade war hitting too close to home?
So what about the global impact and the latest developments of U.S.-China trade war? We are joined in Geneva, Lu Xiankun, who is the managing director of LADECO Geneva and also former senior trade diplomat of China to the WTO. In our Beijing studio, Zhang Gong, professor from University of International Business and Economics. Gentlemen, welcome to the program. Let me go to you, Professor Gong. What about the latest tariffs China announced toward the United States? $75 billion, two batches, one in September, one in December. What's likely to be the latest impact?
Well, first of all, I think this is clearly a tit-for-tat tactic. It's retaliation of the tariffs that are going to be imposed by President Trump on September the 1st. But also we have to keep in mind that even though the total figure is $75 billion of imports to China, but the Chinese government also said that companies can file for exemptions, and I would expect there will be a lot of exemptions being filed in the future. That's for another thing is that whether, keep in mind that they're going to talk. I mean, the delegation is going to meet again in early September. So, I think there's still
as the plan goes.
Right, if as the plan goes, yeah. So there might be still the prospect of, the December 15th tariffs hopefully will not be imposed at all.
We'll see. We're also joined right now by Anna Ashton, who's the director of the Business Advisory Services at the U.S. China Business Council. It's wonderful to see you, Anna. What about your response to the latest development?
Well, I mean, it's hardly surprising. Every time that the United States has announced new tariffs on Chinese imports, China has announced new tariffs on U.S. imports to China. So, it's expected, unfortunately.
It's expected, and I guess we are used to it, even though the impact could be quite something. Mr. Liu, looking at what's going on right now between China and the United States, what do you make of its a global economic impact? In fact, that's why the rest of the world is concerned about this, isn't it?
Yeah, I mean, many recent reports by international organizations are all pointing to a downturn development model. I mean, including some major economies in the world, including the U.S., Germany, China, and others. I mean, so we are seeing a glooming cloud gathering around. Of course, I mean, there's also some other still positive signals that the world economy could still benefit from some of the what I would call strong strengths, that some economies are still growing, employment are still high, wages are still starting to grow, so on and so forth. And the companies also have a nice cash flow. So I mean, both negative and positive signals are there. Of course, the kind of negative picture is looming larger.
Yeah.
The only thing we need to see is how the governments, the leaders, are going to respond to that, to turn the gloomy picture into a brighter one.
I guess that's the biggest uncertainty our world is facing right now, what the leaders are doing these days. Mr. Ashton, let me go to you. There are some signs. GDP-wise, U.S. is doing well still. But if you look at the manufacturing output, it's been down rather than going up, and also the jobs being created over the past few months, it's lower than expected, even though there are still quite a number over there. Meanwhile, American businesses have to consider move their operations to other parts of Asia rather than just in China, increasing the cost of business, that's for sure. What do you make of this mixed picture, given also the earlier stock market and bond market?
Well, I think that the mixed picture is the beginning of us truly seeing the negative impacts of the tariffs start to hit home. So, you know, the Trump administration likes to talk about the fact that manufacturing jobs grew last year in 2018, but in 2019, that's not what we see happening. They're growing at a much, much slower rate. And, you know, even when they were growing, the reality is that the way they were growing, you know, with more steel and aluminum jobs saved or created in the United States, for instance, because of our 232 tariffs, those jobs cost American consumers and companies approximately $900,000 per job, which is, you know, 13 times more than the job actually pays. So they're growing at a great expense to Americans.
But Mr. Ashton, your president, President Trump, is now already very well known for using some mixed tactics as he sees it to boost up the economy. For example, talking to the Fed chairman and trying to cut so-called taxes of personal income, which has been scrapped off this suggestion over the past few days. You know, back and forth, these kind of things, drama going on. How do you read his mixed way of doing things? Is it more tactics, or is it more, shall I say, politics?
Maybe it's a little bit of both. I think that, from my perspective, there's a desire in the Trump administration to stick to the approach to trade that they have initiated, which is, you know, largely tariff-driven and dispute-driven. And there's a desire to try to stick out the negative impacts with the belief that somehow, you know, after we sail through stormy seas, things will get better. And then in the meantime, you know, asking that interest rates be reduced so that it's easier for American consumers to borrow money and spend money. But, you know, we're looking at a global economy where 30 of the world's countries have reduced interest rates this year. That hasn't happened since the global financial crisis.
That's
so
right.
I think that the signs are all there that this approach is hurting us, not helping us.
Mr. Liu, since you're based in Geneva, help us to understand also your perspective. I mean, when Ms. Ashton using the word maybe the sky will clear up after the stormy sea, it's kind of interesting, isn't it? But the question is whether the others will be able to bear the stormy weather during this process. Can they be prepared? If they're not, they're going to also drag the other biggest economies, China, U.S. included, down, isn't it, Mr. Liu?
Yeah, I think one thing is right. You have said, and Ashton has said that the China-U.S. bilateral conflict and the uncertainty it has brought forward will have serious impact on many beyond the two countries, and is global. And many, to be frank, are not prepared yet, simply because of this uncertainty. Nobody can predict what Trump would do. It has going doing this, and the next day does the other thing. And then China has been always kind of hitting back, of course proportionately, but still a kind of escalation of the bilateral conflicts. So which brings a big kind of uncertainty for many people around the world. Here in Geneva, people are talking about that what is going to happen, and that's the question, and nobody could answer it. So I think that the mood is very low, and people are just waiting to see and praying for a kind of how to improvement of all the bilateral situation, and hoping that they could resolve their conflict. But nobody could promise anything.
What you used, a verb which is very impressive to me, praying for the improvement, if there is any, of the bilateral relations. Probably that is a reality that we are facing right now. Professor Gong, about China, also a crucial question. Though the Chinese economy is doing very well, still within 6% range GDP growth, but what China is relying on is a vast domestic market.
Right.
It's also relying on that there is still confidence in Chinese market all over the world. But will this be sustainable, Professor?
Well, I think if the global market is not doing well, it looks like which it looks like it's not going to do well. I think sooner or later it's going to come back to hurt us. Even though you look at the exports figures to countries other than the United States, we're still doing very well. We're doing well with ASEAN countries. We're doing well with European countries. But I think as if the global economy is going to get a recession, we're not going to be immune to that. I think sooner or later it's going to hit back home. But I think, but I think the good thing is that the Chinese government still have a lot of tools at hand. We have monetary tools, also fiscal tools. Not many countries in the world are afforded with this capability to still use the fiscal stimulus package, and we can still do that. So I think we have a little bit of a buffer room here.
Even though that is debated.
Even though it's debated, but I think when when time comes, if something we have to do, we have to do it. So I think jobs are very important here in China. We pay a lot of attention to jobs, right. And we can't afford to have a lot of people on the streets. So we, if that moment comes, we just do it.
Ladies and gentlemen, almost every 10 years, unfortunately, knock the wood, there would be something so-called the financial crisis or economic crisis. 2008. Also, and before that, 1999, and now we're also at a 10-year thing, if you look at that. And now we're facing also climbing of tensions at different fronts when it comes to trade relations. Would we be able to endure this stormy sea, in your words, Ms. Ashton? Finally, before we go.
I wouldn't bet on it. I think that we ought to change our tactics now before it's too late.
Yeah.
Because we very much could end up in a wreck.
Okay, Mr. Liu.
Well, I think, as I said earlier, that this depends very much on how the major players respond to that with the right policy options. And there are many issues ahead that we need to resolve properly, including China-U.S. trade conflict, including the Brexit, including the ongoing Japan and Korea trade disputes, so on and so forth. Yeah.
That's a lot of demand for global leadership and global governance, what you're saying over there, Mr. Liu. And finally, before we go, Professor Gong, briefly.
Well, every economy will weather through these stormy waters every time. I think countries.
Well, in a better shape, or
I mean,
right?
the business. I mean, this is just business cycle. Economies are like that.
Okay.
Bad times do come, and we'll weather through this.
We have a philosopher in the room, obviously. For now, I want to thank the three of you for joining us, John Gong and Anna Ashton. Liu Xiangkun, thank you so much for joining us, and have a great weekend, no matter what. Thank you.
Thank you.
And that is all the time we have for today. If you'd like to see more, try to find us World Insight CGTN into your search engine or check out our YouTube channel. Follow us on Twitter, Facebook, and Sina Weibo. From me, Tian Wei, and everyone on the World Insight team, thanks for watching. Tune in again next time for more insights across China and around the world. The weekend is up. Have a great one, everyone. Bye for now.